I'm Catherine O'Brien. I'm a relationship psychotherapist at happywithbaby.com and author of Happy with Baby, Essential Relationship Advice When Partners Become Parents. And today I'm so happy to be joined by Jillian Verdun, profit strategist, and she's going to be answering our biggest questions about money management. So thank you so much for being with us today, Jillian.
You're welcome. Thank you for the invite.
Yes. So Jillian helps me strategize, and she's just so wise. And so I know there's been a lot of changes. A lot has been going on with the pandemic and everything, and like with stimulus checks and stuff. So I thought maybe you could talk a little bit today with us and maybe talk about some recent changes that might be affecting us as parents and what you might suggest.
Yes, ma'am, I sure can. So in that regards, which it's caused a nightmare for most of us on our end, but because of a lot of the changes, but it is beneficial for you guys in that perspective, because one of the biggest changes that occurred is if anybody had unemployment in 2020, which I know a lot of people did, they're offering up to $10,200 in forgiveness. So if your unemployment did not exceed $10,200, you get that towards your tax return for 2020 as a credit. So then you're not being taxed on that money, because a lot of people did not take taxes out.
Okay.
But that's something you have to notify when you apply for it, if you want taxes taken out or not. So that's one of the biggest things. And I know a lot of software providers are still waiting for the regulation to come from the IRS. So all we ask is for you guys to be patient with us. It's not us delaying it, of course, but they made that change at the last minute, and now they have to update all the softwares to figure out how to reflect that on your tax return. Okay. So I've been holding on to most of my clients that have unemployment and saying, please wait until we can get some type of guidance on how to put this in the system so you don't have to pay taxes on it. So at this point, patience is a virtue for that one. The stimulus checks. So several people have been asking and inquiring. As soon as I ask the question, hey, did you receive the stimulus and how much? I get people on the defensive and say, well, I thought that wasn't taxable. And it's not. What they've done is, if for some reason you did not receive the first stimulus, which was $1,200 per adult on tax return and $500 per child, depending on the age of that child. Okay. If for some reason you had a baby in 2020, that child was not on your 2019 tax return, so you credit for that child on your 2020 tax return as a recovery rebate credit.
Okay. Oh, that's really good to know, because I know several parents on here have had babies this year, or this last year.
That has been the biggest question is, well, I've had a baby in 2020. How do I get the money for that stimulus? They may have received it for the second one at the $600 per individual that was on your return. If they haven't, some people still haven't received the second stimulus, but they've got $1,400 they just released. We reconcile that on your tax return, so you would still get credit for it. You just won't get it in the mail anymore, but you still get credit for that particular child. And no, your stimulus checks are not taxable. With the recent unemployment forgiveness, the other change which impacts parents with children is they've expanded the child tax credit. So each child usually is worth up to $2,000, depending on your income on your tax return. Well, for 2021, they've decided to increase that to $3,600.
Oh, wow.
For children under 6, and to $3,000 for kids between 6 and 17. Those are the biggest three things that happened.
So that's good. I mean, it's been a really rough year for many people financially. What do you suggest to your clients that you work with on how to reduce like financial surprises? Like, I know a lot of people like lost jobs and different things this last year, or their hours were reduced or different things. Like, do you have suggestions on how to prepare for things like that?
One of the biggest things that helps to minimize that is having an emergency fund. A lot of people tell me all the time, well, I don't have the extra cash or the resources to allocate to an emergency fund. The one way to get to that point is if you eliminate debt. We all love plastic, credit cards, just as well as cash.
Yes. Yes.
But if you have your debit card and you have $20 in your purse or in your wallet, and you get to the register and your transaction is $10, are you pulling out the 20? Or are you going to use your debit card? Because you're more likely to swipe versus using.
Well, I want to save that 20 in case I need it for something.
Exactly. And you should be using the 20 to pay for whatever you're getting versus using your debit card, which is the same bad habit we have when it comes to credit cards. You're more likely to swipe. It's like, oh, well, I needed that. Well, is it a need or a want?
Okay.
And if it is a need, is it a need right now? You can expect the expense and save for them. So like if you're trying to plan for a vacation of some sort, you can plan for your vacation and put money aside to accommodate. This one gets people all the time, and it's like live below your means. It was like, what exactly does that mean? Well, yes, everything that you bring in. And a lot of the times when people are W-2 and they get a raise, they'll say, hey, I never realized an increase in my check, or vice versa. And I'm like, well, no, because your lifestyle adapted to the income that you thought you were making. One of the strategies that I use really good with my business owners is Profit First, which is a cash management tool. Profit First not only caters to business cash management, but it can also cater to household cash management. A lot of my businesses were able to survive for at least 3 months out of the pandemic because they were on Profit First. So they had the resources put aside in preparation for them, A, not being able to work, B, there's some they get sick, and even as an individual anyway, you may get sick and not be able to work. Several people had to take money out of their 401ks or their retirements. So I know they waived for 2020, they waived the 10% penalty if you didn't qualify for that age group, because they usually charge you 10% penalty plus taxes on taking that money out early. So a lot of people had to utilize their retirement accounts. That's what they're there for. But the biggest thing, what they've given you the option is, if you had to take out of your retirement account, you have 3 years to pay that money back. And you can do an amendment on your prior year return that you paid taxes, federal taxes, because the penalty was waived. So then they're giving you an opportunity to put that money back. So if that was one of the choices, you're like, okay, I really want to save for my retirement. Let me start planning to put that money back. So then if something like this happens again, you have that money there as a resource to help you.
So tell us, for those people that haven't heard of Profit First, I read that book several years ago. I really enjoyed it and have been trying to implement that into my own business and stuff. If they don't know about it and maybe they're not a business owner, like how is that something that they could utilize?
So what Profit First is, I don't know if you've heard of your grandmother's old school envelope system. We've modernized it. So now instead of using envelopes, you use bank accounts. So you have a dedicated bank account for your money from your paycheck for your household that goes in. You have a dedicated bank account for just personal expenses or your monthly bills. You have one for vacation fund. On the business side, most of my clients have a profit account. So they put their money aside to pay themselves or reward themselves for being profitable. And it serves as what we call, you can have an emergency fund and put so much money aside. It's one of those where whatever works ideally for you, you create a bank account for it. And you're allocating money not by amount, but by percentage. So if you look at your household income, which then goes back into, well, I really don't know how much my house makes. So then it's like, well, you have to create a budget. I call it a spending plan.
That sounds so much more positive than a budget. A spending plan. I like that.
I like spending plan because I'm giving you permission to spend your money versus limiting you to what you can spend.
Yes.
You're more likely to follow a spending plan versus me telling you, let me budget what you have to spend. That just sounds and impersonal. So once you figure out what your income is and what percentage of your income goes to bills, let's say it's 30%. So you take 30% and you put that to your bill account every month. Or however often you get paid. So that 30% goes in there and it covers your household bills. The next account, if you say, okay, well, I want to contribute at least 5% to my vacation fund. I have a friend of mine and she puts $200 every month into an account for vacation. Her and her husband takes a vacation every year. And so she's implemented that where it goes in all the time. Their insurance, she puts some money aside for their retirement, outside of just what they're doing with their company at work. So you have 30% to, your household bills. You have 5% to this vacation fund. You can put another 5% to emergency fund, and you allocate it all the way out until you get to 100% where it's allocated. So then every dollar has a place. And when it does, you'd be surprised how your money changes, because now you're bringing more awareness to what you're spending money on and how your dollar functions in your household.
Do you suggest that people pay off any debt they have before they implement something like this? Okay.
They don't have to necessarily pay it off. They can put a plan in place to eliminate it. Because you didn't get in that overnight. Let's say they have like just a regular savings account that they put money in. That regular savings account can be served as, like, let's say every quarter you go in and you make a payment towards your debt. You help eliminate it, but your monthly payment comes out of your household expense account. So then you're eliminating a whole lot faster.
So if you're opening up all these accounts, what is your suggestion? Like just different bank accounts all at the same bank to make it easier?
I would do it at the same bank. A lot of the banks, especially on the personal side, there are not many fees associated with the accounts. On the personal side, it's more fees associated with the business side. So you can probably get several business accounts. I know Chase, one in particular, has a bank account. I know on the business side where you can have like 99 sub accounts. And you're $35 for the first account. One has on their business side, you have one account and then you can have 2 sub accounts for $35 or something like that a month. So then you get 3 accounts for the price you would normally pay at one bank for one. And I'm sure they do something similar on the personal side as well.
So that's super helpful, because so much changes when we bring a new child home and there's so many more expenses, and it's like figuring all of that out and like how to like streamline things. And I think oftentimes I'll hear from people prior to having children, maybe they didn't have a joint account with their partner. And now it's like, oh, maybe someone either isn't working or their hours have been reduced, or, it's a whole another level of negotiation.
Yes. And one of the biggest constraints within a relationship when it comes to outside of money is children. And so it adds the added stress. If you already have challenges around money and then you bring in a new baby, the expenses now grow due to that particular child. And majority of the time I hear moms say this all the time, I'm just going to work to pay for daycare. It's like, well, do you work or do you just stay at home and you take care of the kids, which is also a job in itself? So then that's a decision that's where the discussion of money has to happen in the household to see. Really beneficial to send your children to school, because the younger they are, the more expensive daycare services are.
Right. Oh gosh, they're so expensive.
Yes, exactly. And everybody's like, I can't write this $20,000 off. I'm like, no, you get $2,000. How about that?
And it's like, if you don't have an option, that is your only option. You have to send your kids to daycare. It's like, it's such an expense.
Yes.
I guess my next question is saving for college. How do you save for college when you're paying $20,000 a year on daycare.
The biggest thing is there are different avenues for individuals to start saving for college, where as a parent, you can start reaping the benefits. For example, there is the 529 plan. There are the pros and the cons to that particular plan, but it is set up where you do, as a parent, get federal tax breaks and certain states. And I know one in particular is the state of New York will give you a tax break on your tax return because you are contribute to a 529 plan.
Oh, wow.
And so each state, and it's not all states, but you can go and look up to see what are the benefits that particular state has in regards to that 529 plan. There's no income-based limitations.
Where would you look for that to see if your state, like a lot of our parents are from California, so I don't know.
You know what? I can send you a link, actually.
Okay. All right. And then I'll share it with everybody.
The age-based option, so it's not necessarily based off of age. So it starts anywhere from K through 12. You can pay for their tuition. A lot of parents are in private school. And the flexibility of the use. So a lot of people don't necessarily know this, that you can use up to $10,000 to repay back student loan debt for that particular child or beneficiary that is on that policy. You can use it for qualified trade schools and continuing education and apprenticeships. There are a lot of options with the 529 plan. Now, the challenge that comes down, of course, with the options, there's the cons. With one of the cons is if you decide that you're going to be that parent that's going to be diligent in saving for my child to go to school, and your child, let's say, does qualify for free financial aid, they will take into consideration what you've contributed to that 529 plan before they offer your child any type of financial award.
Okay.
And that's not fair to you because you've diligently put money aside to help your child pay for school. It's like, oh, well, I'm being penalized for putting money aside. I have one of my clients, her son just moved off campus and he has a 529 plan that they're using because his apartment rent, any expenses basically for room and board that are associated. So each school should have a standard number of how much it should cost for room and board and basically that aspect of it. So then whatever that amount is, they can attribute that to them living off campus. So the stuff that he has in his apartment, groceries, internet, his rent, and things like that is still housing under the 529 plan, but you can't exceed the school's standard. So you should be able to find that on the actual school's website of what that number really is when it comes to room and board. A lot of people don't know this, but there's also the option of life insurance policies. Everybody thinks that they're used for death benefits only, but there are certain ones, such as Index Universal Life, that actually can serve as a savings account for kids because it's a combination of basically a whole life and a term policy in one. That it draws cash value, but it's also tied to the market. And so that can also be used. The benefit to that particular one is it's life insurance. So when you get ready to apply for financial aid, it doesn't impact all of the aid that your child would be eligible for.
Wow, I didn't realize that.
Yes, so there's an avenue for you to use life insurance policies outside of just for death benefits.
Okay. You're just like a wealth of like information. How do people find you? What, like if they had like more questions or specific questions or wanted to know like how to save or maybe like how to create a spending plan, like how do they find you, Jillian?
Yes, my website, I do have a website and it is J as in Jill, M as in Michael, V as in Victor, financial services with an S.com. It will be a pop-up in the bottom right-hand corner, and they can book an appointment with me. They can leave me comments to contact me, and I'll be more than happy to answer any questions because I know everybody's situation is very specific to their needs.
Yeah.
And this is just kind of an overarching, hey, these are some of the options, and some people may be eligible for them, and some people may not, depending on their circumstances. Yep.
Right.
I'm on Facebook, so under my company name, JMV Financial Services, Twitter and LinkedIn.
Do you have any final thoughts for parents? Like maybe a final tip or something to consider?
I don't know, and I laugh because I'm not a parent, but it's funny because I always tell people when you have kids and the anticipation is when they turn 18, they go away. No, they come back. It's no longer 18. It is a longer time span that they are around. So look, and I laugh because I have godchildren and I love them to death. I like the ones I can borrow and give back. My thing is just to sit down and embrace your situation from a financial standpoint. It's not always the best thing to continue down the same path that you've been going. Other people are in the same situation you are in, so you're not alone in that aspect, and there's nothing wrong with you if you don't feel that your financial situation is where it needs to be, because a lot of people take that personally, very, very personal.
Like anytime we're trying to learn something or do something different, it takes like small, like I think like small little changes, right? Like incremental changes that then build up over time. Like we don't necessarily need to do I think it can sound like you're talking about these different like bank accounts. And I think that can sound like overwhelming. It's like, oh, I just can't do it. It's like, okay, well, but what's one little thing you could do? Like what's one little step you could take, and you do one little step at a time, and it gradually they build, and they, it's a momentum that you get with that.
For us as humans, we like instant gratification.
Yeah. That's why we use our cards.
Exactly. And so when you get that small accomplishment, it kind of helps you to motivate you to do something else. Well, okay, this happened because I did this. So what do I need to do to move forward? And I tell people, just start somewhere.
Yes. Like, do you have like a common starting place? Like, I know I need to save more money for college. I want to have 3 months savings so that if something happens again, like we're prepared. Like, is there a starting point you would suggest?
I would suggest them to pull their bank statement for a month. Highlight in 2 different colors, a need and a want. When you're starting weight loss, in order for you to get to your target weight, you need to know where you're starting. And so it's easy because we subconsciously spend a lot of money. So now what we need to do is start paying more attention and be consciously aware of what you're spending your money on. We have an idea, but you really need to kind of figure out. And I always suggest people that I'm like, print out one bank statement for 1 month and get 2 different color highlighters and highlight a need and a want, and tell me what you see when you get to the end. And a lot of people are not very happy. They're like, oh my God, I can't believe I spent this much money on. And so now you can kind of hone in on where certain challenges start or end within your financial situation.
Oh, that's good. That's so helpful. Well, Jillian, thank you so much for being here with us. So many helpful tips. And I would love for you guys to like leave a comment or post in the group, like one tip that you learned today that you plan on implementing or trying to implement. And if you are watching this video as a recording on another platform, you please join us in our Happy with Baby community for more interviews and other tips and suggestions. And until next time, take care of yourself, because remember, it's not if you have time, but it's a necessity. So thanks again, Jillian. So glad you were able to join us, and we'll see you all next time.